Hello, good morning. Welcome to another US Future Stream video stream. Today is Monday, September 25th. It is 8:53 Eastern Time. We got at this moment the market. We still have one almost one more period to go. Let me pause this. Let me pause as of 8:50, right? Market is supposed to open with a gap. Gap guideline supply. Jim Dalton gap guidelines. I'm going to use Jim Dalton gap guidelines. What are these gap guidelines? Is go with any gap that is not filled right quickly. If there's going to be any buying, if there's any buying coming, or if the gap is going to be filled, usually happens really fast. The bigger the gap, the harder or the less likely is to be filled. How big is this gap? 57 is the higher the gap, 52 it's not that much, or like 500, right? It's not that big, like 20, 25. The bigs has increased now. The bigs is around 18, something like that. There is the bond market now. No, it's just this historical low, so it's very low. This is putting pressure on the market. Oil also is trending higher. The dollar is also trading higher. These things helps to the market, a high dollar. But the pressure coming from the bond market could be, it's helping the reparation mode in which the market is at this moment. We talked over the weekend about this range in the monthly, the weekly, the weakness in the lower side, and how all time frames are in sync. All the monthly is going lower, weekly is starting to go lower, still in range, but kind of like, if this week takes this low out, the whole week can come all the way up to here, for example. And as long as this bar high is not taken out, the trend still will be to the downside. And let's not talk about the weakness in the daily time frame. We talk about this, the tremendous amount of weakness in the lower side, multiple gaps here, 3 gaps here, 2 gaps here, 3 gaps if this opens today with a gap as well. So that's a sign of emotional trading. Lots of emotion, very emotional trading here going on, which is also a sign that the participants on these markets are mostly, or are dominated. The market is dominated by short time frame trading capital. The absence of bigger capital here is notable. The craziness that we have over the weekend, oh my bad, on Friday, right? We got this Friday. It was incredible. It was incredibly crazy Friday. Now we have the overnight. We have seller right here, right at the center. Now good amount of session happened above saddle, another good amount below saddle, so it's kind of like a fairly balanced. This is balanced. From Friday we have inventory has getting short on Friday with this late liquidation that happened here. What catches my attention from the overnight right now is this pullback or this rally high here. After this inventory was liquidated, you have rally high exactly to last to the peak actually. That's very questionable as well. My main focus. I mean, there are many things to watch in this market. One of these is the gap. The gap. Right? We're talking about the gap. The other thing is this rally high here, and I think the most important would be these levels here. You know, because this is a very critical level, in my opinion. This level here, and is also a reference for all time frames, not just the intraday here, but also the daily, the weekly, and the monthly time frames. All time frames have that reference, that notable reference out there. Let me finish my post, my Twitter, and I'll be back soon. If you have any questions, please just let me know. Any comments or any you hang up, if I share something, I would love to hear it. All right, be back soon. But it always takes me so long to write, such a few statements, such a few words on Twitter. Oh, look at that break. The gap is increasing here, I still haven't paused. Just a second. I am about to finish this thing. All right, all right, all right. I finally position 9:10. It took me like 15 minutes to do a small, really, 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 really small post here. This is what I was talking, right? Gap guidelines here. We have a gap here. The market was here, now it's down here. We have a gap here. Use Jim Gatton gap guidelines. If the gap is not filled quickly, go with it. Go with the gap, right? But this guideline is not like for the first 5 minutes, right? It's overall for the day. Now we have the day, the gap is not filled, the direction is to the downside. Also, we have this market that is trending lower. By direction is the market to the downside. Traders will be selling rallies. That's another thing, right? One nice opportunity, nice trade that may happen is also if the market tries to fill the gap, but volume just dries before the gap is filled. That's a good opportunity to sell as well, because it gives you location. We go to the downside at what is our stop, the close of the gap. If the gap close, we're out, just like that. The trade did not work. Right, this inventory. That's what the gap guidelines. If the gap is close, we start monitoring value. We start to see what happens with value down here. Right, value is, because it's overlapping to lower. Most of the trade on Friday was made below the spike. You can see almost 80% of the value is below the spike, below this spike from the previous day. We have a key level now. This is the 4350. This the whole area, here. Notice how this area here is clear. There is nothing here, no references here. And this is what we have up above here. More signs of weakness, right? This is rally high to last. Notice where the market, where the overnight high is as well. Half back here. Now this is signs that who is in the market, who are we competing against. The same thing that happened. The market is going from long liquidation to short cover, long liquidation to short cover, long liquidation, short cover. The market is doing that, and the trend is to the downside. Just pay attention to those details, so we will have an idea what should be the direction of our trade. Most traders get very emotional at the opening. I want to trade. I want to go with this market right away. I want to miss. I don't want to miss the opportunity, right? And they are just being stopped frequently. Every trade that they post, or you post, or we post, we do, the market just stops us out, because we don't have passions. Passion is key in this business. That's all that is gap guidelines. All those things. The market as it's trading, the market is in liquidation mode, is repairing all the inventory that we have here. All of this rally, it is very, very questionable, right? The stage or the part of this trade in the daily, for example, that re-entered this range, the trade ends when it reaches the opposite side. That's the ultimate destination of this trade in the daily. It happens now that new, in this case, is balance guidelines apply here at this level because I reached the opposite side. It happens that we have the 40. We have at this level is not just the culmination of this trade in the daily time frame, but also it's a multiple references here. We have multiple references. It's the high of this range in the monthly time frame. It's also the breakout level in the weekly time frame. It's also August low here. Right? We have 3-month range. In this range, the opposite side of this range has been reached. When it reaches, that's the end of the trade. But also happens to be the high of this 13-month range that could risk penetration. Penetrating in this area, this range, the ultimate destination is the opposite side of that range. But if this is the monthly time frame, if there is something there, if there is some serious selling there, it may take months to do that. Right? Notice also we have come on. Notice also that we have the situation of the potential shutdown. Government shutdown. We have the bond market pressuring to the lower side as well. So a lot of things are going on right now. Now this is the bond market. This is the day. I mean, let's put the daily. Just a second, please. Hello again. Man, those spam calls I hate those ones. Notice. I was showing again the bond market is look at these historic lows here, very low here. This was support. The market was multiple times coming to, and this now is putting pressure on the market. We have the bond market. We have the potential shutdown that may happen. We have the market that is in correction mode. Extremely weak inventory in the lower side. The traders coming from the upper side is also very weak. Right? All those things combined. Geopolitical events also may add to this. And now everybody's negative now. Everybody's negative. Just a couple of weeks ago, the market was going to make new highs. There was no crash landing. There was soft landing. Everything was, losses. Everything was fine. We were in heaven. And now, just a couple of weeks, everything changed. But everything changed in the mind. And this is a business. You need to sell. Every business has to sell something. What do you sell here? Ask yourself that question. What do you sell here? What is the business here? All right? And what is the business of these news outlets, or the business of the investors that you will read on Twitter, or the people that comes to write some articles on the Wall Street Journal, or that is interview in CNBC? They are selling something. Okay? We just don't know what they are selling. Trying to remain neutral is very hard. I have to give that. And to watching the market generating information helps to do that. Now, that's what I put here, for example. This market generating information, these lows, critical levels here. I try to remain. It's very hard to remain neutral. We have a lot of biases. We are the dominant species in this planet, not because we make rational decisions, because but we do a lot of emotional decisions, right? Very quick, intuitive decisions based on emotions rather than rational thinking. Okay, now it never ceases to amaze me. Look at this. I mean, this reference down here, this shouldn't be valid for nothing here, right? Because this is from the previous contract. This is from September contract. It has nothing to do. But notice where this market was bought from. My God. No, it tells us who is doing. It's just there are no. Again, I guess the main thing is the lack of serious capital here. There's no serious capital in this market. This is just trading money, what we have here in this market, the market overall. We have small traders, we have bigger traders. Bigger traders are not that active. They take time, and they often will trade the inventory. When you perceive that the market is too short, for example, just pay attention to this. What can happen here now? If you see this, what do you see here? What the market is doing? It's selling, right? We have inventory here. This inventory here is liquidation of this one. All of this inventory that went long from where? From Settle. Was sold from Halbach. All this inventory has been liquidated. I think this is London opening here. Now you perceive this. Where was sold from? Last. The next one sold from last. 1, twice, 3 times, 4 times. Here. Inventory, this gives you an idea who is doing selling. Inventory is short. It's getting short here. Overall, you see the balance, right? Settle. Most of the inventory up here. Some maybe less, because you can see higher volume up here and not down here. It is hard to be neutral. I have to keep that. The trades that we have here, the market gives us opportunity, maybe 1, 2, 3 opportunities a day, no more. But it's emotion to control our emotions is hard. I was talking about that on yesterday. I didn't trade Friday, but I didn't trade morning, but I use a practice account, and I get sucked. I was sucked into price. The emotions just take over, and this is embarrassing to admit, but I made like 30 trades, right? I remember. Just because you have that feeling, okay, I'm not going to lose nothing, I'm not going to win anything, but I got this, I can do this, and you have this tendency to do a lot of trades. There wasn't more. There was just 2 opportunities on Friday. One was this. For the reason we talk, we even made a replay, and another one was this low here. You know, and the destination for this opportunity here was just down somewhere down here. You know, maybe half back of this area, which would be somewhere like here. But I would never have expected something like this. And this one as well, there was maybe again, okay, maybe around this area, right? But it was unbelievable what happened. And I feel bad. I mean, even though I didn't have any kind of money, the money involved, still, you know, I had this feeling of despair when you don't get what you think you will get. That's what I got from that day. Even though, right? Even though there's no money, emotions just take control over you really quick, really quick. All right. Now, let me see, I can open my I'm opening my trading platforms here. All right. Who wants to trade? Everybody will be very anxious now, very anxious to place trades here. I suspect. I don't want to miss the trade. This market is going to break. It's going to come out. Coming down to here is the end of one trade. Coming down to here is the end of another trade. Coming below, trading from these three levels, trading below and showing acceptance of lower prices, which means building value below this area, could lead to downside continuation in the market. I'm not saying today, but downside continuation in the market. But also, by doing that, the market will have three gaps in the upper side. Notice how the market builds inventory here. What kind of inventory we're having? We're building here. You know, there's a lot of accumulation of short inventory. Who is holding the inventory? The short inventory. Just ask yourself that question. Who is holding this inventory? Short time frame trading, right? Inventory is in weak hands. Why I say it's in weak hands? For the way how this market's trading. You know, coming from fallback, coming from POC, up here, non-excess high here, a lot of things. There are a lot of evidence of the kind of trading that is going on. Maybe just a second, let me put my I wanted to do. Any questions? And then it's going to be in days like this, like today, there's going to be a lot of traders that are interested in this market. You will see a lot of traders here. There's a lot of people that gets attracted to this market. Okay, finally I have what I deserve. Finally I will make up for all the losses I have today. I know the market is going to break hard. I'm going to be short. I'm going to make a lot of money. I'm not saying that that's not going to happen. Just be patient and let's have a good read of the market. The first thing is the gap. High, questionable high, questionable low. You know, it's just short time frame trading here, all over the place. The main thing right now, I mean, I cannot even focus in one thing. That's how hard it is. I cannot even focus in one thing. I would say the gap is one thing. The other thing is the August low, the 4-week range low, out of the 13-month range low. After those, yeah. You got a lot of things going on here at the same time. Then you had the, no, I mean, this is just very, I think for me it's too much. I'm getting tired of this market. All right, the market is open now. Let's see what this market does. Market is above this 13 months range. The market is starting to fill the gap. As usual, my charts are not loading. All right, I have one there, another one there, another one there, and another one. All right. First thing, the market is starting to close the gap. It's a lot of trade along. Man, and notice how this volume is. Oh, it's a little bit higher here. A little bit higher than Friday. But it's too early. I mean, just less than 2 minutes in the open. Let's see the gap. I guess my main focus is the gap here. Let's see the gap is filled. Try to go lower, just didn't have it. Now volume is accumulating above the opening. Just around August low. We have a gap in the monthly time frame. Oh, my bad, no. My bad, sorry. The weekly time frame. This is a real gap. It's very, very rare to have gaps in the month, in the weekly. It doesn't happen that often. Rarely happens. Right. Market didn't care about the short inventory here. I will put a 2-tick chart versus a 1-tick chart side by side here. notice the difference. What I have on this, I might try to close the gap, but we gave you some volume on the upper side here. There's some volume on the upper side, didn't dry. You can see that better if you use a 2-tick chart here. You just dry 16 contracts at high. Now we have 3 gaps on the upper side. The gap has not filled quickly. Right? If a gap is going to be filled, usually the buying comes in, you have large amounts of buying, huge volume, and the gap is filled quickly. It didn't happen. That didn't happen. That's what I have from what I'm seeing now. Two volume nodes here, one up here, one down here. Just boom, dries here, boom, dries here. You have 6,000 here, 6,000 here. This rally didn't get to the opening. Notice where the opening is, this dot here. Let's see if we can get back to these levels here. This is the culmination of one trade, a 4-week range low. This is the culmination of another trade. This is the ultimate destination of 2 trades on one time frame, in another time frame, both very close to each other. And of course, this is a daily time frame as well. Inventory is very short at this moment, very short. Oh, this is from Friday. The craziness that happened, how this was liquidated here, inventory was liquidated. Again, is this a second attempt? To revisit this high. Trading above the opening I think will represent another attempt to make the market another attempt to extend this high, that close this gap. Notice what is being sold from. Held back. Comes back. First came back to the opening, then to hold back. Man, this is just incredible here, to the tick here. And you will hear, right? You will hear out there. There will be people, traders. Oh, I knew there was going. No, it was here. I called this level. You know. That's just. Okay, this is making. Notice where it's trading. Just run back and forth above the opening here. back and forth, back and forth, back and forth. Volume, overnight volume 273. We are just 5 minutes, no, 10 minutes in the opening. Into the opening, you have 65. By the end of this first period, we should have around 200,000. Can you see why? And why I don't consider this opening, why we do not consider the overnight trade as relevant. This overnight doesn't fix or repair anything because of the volume. Again, it came back to traders. The market has been sold from the opening. And it's really hard. I give you that. It's really hard to remain calm and neutral and wait until the market shows. Give us an opportunity. It comes. Right? It's hard to believe, but it comes. Suddenly you will just see something. Okay, wait a minute, what's going on here? Huh? You will have that feeling, that some sudden realization that, oh, okay, wait a minute, right? Wait, what? Wait, what? You have that feeling, that aha moment. Each time an opportunity arises. The market has traded through the opening, took this level out, is taking this one out, and making a first attempt to close, a second attempt to close the gap. Do we have volume here? About the same as Friday. How much volume do we have Friday? Really low volume, right, relative to the previous day. So if today is going to be like Friday, it's going to be a day with low volume. Those observations, that is market generated information. This is an attempt to close the gap. The second time market tries to close the gap. Nice taper here. Yeah? Very nice here. Just notice how her volume then just dries here. Zzz, zzz. We did not have that on this day, for example. Right? Daily profile shows something, but when you look closer, when you look deeper, you see that there's no taper here. No taper here on the lower side. The action was not completed. Now the market is trying to close the gap. Market is trying to close the gap. Notice the difference here. You have whites here, you have reds, pinks here, down here. There's a lot of volume here in this area. I mean, relative to what is going on right now. The 2-tick chart increments, the 2-tick increment chart shows less than 7,000. Notice how it dries here, start to dry here. Alright. Culmination of multiple, the market reached multiple ultimate destinations in multiple time frames. Balance guidelines apply as well in the bigger time frames. The intraday has this gap. Alright. if this gap is filled, it will change many things. Can you see like two distributions being formed here? We have one here, and another one, bigger one down here. You can see one here, value here, and then this one is wider, has way more volume down here than up here. Let's see if the volumes builds up here. So we have two, and these two are called distributions. Are separated, but this the lowest volume we have here. This whole period is down, is right here, this area here. You know, the same concept that we use when trading distributions in the daily time frame. You know, getting inside the distribution targets the opposite side of that distribution or the other distributions. If the market gets out of this one, comes back in here, it could very well target the opposite side. Now the weakness of this trade, yeah. And that's why I have the two tick increments here. You can see better. You can see better here. Half back, sold from last, sold from zero. It's just drying out here. Traders are very excited here. There's a lot of participation in this market now. Okay. Oh, let's see. Let's see. The market closes this gap here. Gap has been closed. Right? So I don't. When the market does this, for example, that high is not good. That high is not good. Volume is drying, but high is not good. The market has good, also keeps going. That's not a good level to sell. That actually is an exit. Right? If I am sure that would be my stop, I would be out right now. If I am long, that could be, all right. This time, this market can have some upside continuation here, and it changed everything. The fact that the market closed that gap, changed my view of the market. Right now, I am not looking to the downside anymore. I was looking, for example, for a place to sell here. Now, when the market came up to here, okay, this could be a good. Let's see, the market makes another push to the upside, and the next push happened and closed the gap. It closed the gap. That changes everything. Now, I will see what happens with value. Value keeps moving higher. Value builds up below this level, around these levels here, below these levels. What happens to value? if we have a rally here, we have a whole rally with some rotation on it, which will make or which cause that the value doesn't move higher. And good also could be some liquidation at closing, because value doesn't move higher. Change, or for this market to remain unchanged relative to Friday, the market needs a huge rally and start building value here to push value inside this value area. As long as this high is not taken, the market, the trend remains to the downside. Notice the amount of changes that we monitor here. Something has changed now. Be aware of the change. Man, this is unbelievable. This low is unbelievable. It just has no taper here. How much is the VIX? How high is the VIX today? Watch this indices 17. It was 18 before the opening. It's a little bit lower right now, but relatively high. Something that I did not do. I forgot to do today is what events do we have this week? Uh-oh. What events do we have this week? Oh, come on. Come on, come on. Please, please. GDP. We have GDP here. This is the weekly. Consumer confidence tomorrow. This can be something as well. International trade, gold price and commodities at this time here. This is another calendar. It's the same, right? This is this one over here, and this one over here, and this one over here. Core PC. Inflation is proven very hard to be deal with. To control inflation, once inflation is alright. We have some taper here now. It's interesting here. gosh, I don't know. You know, the higher the bigs, is the higher. The bigs is supposed to be an index that measures risk. You know, it's not a good. It's not a good indicator on risk. Right now it's 18, but when we was 14, the risk was really high, and that risk was not being reflected by the bigs. Huh? We talk about that. We talk about how cheap this market was to get options, to get puts. Really cheap. We talk about that kind of like the beginning last week. And when that happened, we have increased bigs, volatility also increased, and we need to give more room for to these references, for example, right? The lower the volatility, the more odds the market will have this kind of action, right? Exactly to the tick. When volatility increases, this may come all the way down to here, right? For example, and I will consider like it's coming to this level, actually, which is what happened here when the market re-entered previous day range, re-entered Friday's range, and now it's being sold from hard back. Well, this is not a good level to be sold. Now, look at this. The market re-entered previous day range. Now we start monitoring value, right? The market re-entered previous day range. Now market re-entered this previous day range. It's selling from this holdback, which is not good. The potential destination of this action is the opposite side of this range, actually. Notice how there's a lot of inventory here that came from last down here. And the whole overnight inventory, whole overnight session comes from this holdback here. The lack of volume, look at that. Volume is going to be as low as Friday's. This wasn't good. This is not good. These levels here remember, these levels here, these two we have here, is the culmination of trades. These levels are the ultimate destination of trades in multiple time frames. Now, nothing has changed in this market. So notice where the market is. It's a seller, Friday seller. Well, Right when it closed on Friday, it is right. It is right there. Right when it closed on Friday. It's right at settle. Can you see this? This is where the market settled on Friday. So this market, the market is unchanged relative to Friday. Value is lower. The market has re-entered previous day range. Uh, the market closed here on Friday. Oh, I called this a spike on Friday, but I decided to not to do that after the craziness we had that day. Also, I was wondering if this is a downside spike, and I decided to this was going to be excess for me on Friday. Now, the mechanical way how this market was being sold, the same kind of action is happening in the opposite direction. Maybe here, I got something here. Huh? The market didn't take any of these single prints down here. No volume here. The chunk of the volume is up here. So the value area of this is the overnight. I mean, this could be a counteraction to overnight inventory. Volume is a little bit. I would say the same as Friday. Now the seller. Look at what we have at the high. Look at what we have at the low. This low is no good. High is not good. Who is here? Who is doing what here? What is our competence doing here? Who is our competence here? Now, everybody knows the market is breaking now. Now this has been repaired. It leaves us this high, this non-excess high here. God damn. Don't tell me that this market is going to be bought from this level. Come on. Why I have this level? This is yesterday's. I mean, this is Friday's low. Very mechanical trading here. I can erase this level now. Let's see where it's coming from. Huh? These levels as well. I will keep those ones. I think will become relevant. I mean, they are relevant. Yep. Even this one as well. Come on, what's going on with you? I don't want the last one red here. Man, how hard is for me to go to be short here? No, but this is traders. You know, this market sells rallies. They're selling rallies here. This was a big rally, and this is a sell. And you have something here. Your stop. This is location as well. Your stop is one tick from. The stop is your stop is high, or maybe one tick high. No more. And you have to do that. You have to do that before entering the market. You need to know that. Don't. We cannot wait here. We cannot wait. The market comes down here to put our stops here. It has to be there. Almost simultaneously. Almost at the same time as we enter here. It remains as an inside bar in the upper side. The market has re-entered the 13-month range. Now, what do we have in the upper side? I guess we have non-excess. No mechanical selling here. Mechanical sell here as well. Big gap. Okay. Non-excess up there. Selling from a high, buying from previous day and day low. VIX is getting lower. When the market make this kind of highs, perhaps non-excess high, for example, right now, that kind of high has a tendency to limit the damage the market can do in the opposite direction to where the poor high is. Right? Let's notice that in this case, if the market is breaking, if the market breaks, it tends like to limit, to like hold that break a bit. Come on, don't tell me. Did you see? Can you see the shape of this histogram? This is a horrendous shape. This is characteristic, this is classic of short time frame trading here. Now, notice the difference between this one versus this one. This is really nice. Really nice here as well. And this one too. This one too. This one, and kind of this one. Look at this really nice distribution here, right? Really nice here. It doesn't get back inside this one. The next time it goes through, it targets the opposite side. It gains momentum. But I can see this just after the fact, right? Just after the fact, oh, I'm going to make sense what's going on in this market. No, everybody can do that. Everybody can do that. The thing is to be present and seeing in the market while it's happening. That is the goal in trading. Guess what you can do when the market is really high? You can hedge, right? This market had a huge rally this year from 2 contracts ago. The market hasn't stopped, it was running higher. Some stocks have 100, 150, 107% in in 2 quarters. It's unbelievable. And what you do when you have such a tremendous amount of gains? You hedge, right? I mean, professionals do that. Let me remove this thing here. I don't see any kind of things, not 10,000s. I love to see. I like when I see, for example, the market is going higher. Okay, I got 10,000s in this area because this is 2 ticks chart, 2 ticks increment chart here. 2 ticks increments. 10,000 somewhere. No, and just it's not. They're getting closer here. 8,000, 8,000, 7,000 here. But also another thing, the higher the bigs, the thinner this is the thinner the body is going to be. I may need to use 3 ticks to see 10,000, for example. The higher the bigs. Or the wider the range. Mechanical high, B high is mechanical, B low is mechanical, B high is right at A high, B low is right at A half back, and call it. I can call this half back. A half back. You can use that as a reference, huh? But it's I know now. Before I used to do some grace to remember, but just remember this is high back. It would be more relevant if this has, for example, it has another period trades through this halfback. Won't be just a halfback, but will be also the daily halfback. 2 periods is the same, it's not that much. Alright guys, it is 10:15. This part of the inventory, especially this one that came exactly from last here, huh? That part, this has been corrected. Unfortunately, that mean that what that causes is the market close the gap. The market close the gap, which makes the reading harder. Huh? The reading harder. We don't have a good low. We don't have a good high. We don't have a good low. Even this one, well, it has taper. It has some taper, but I will question. I will question this level as well. When we have these significant levels, these key levels, as we are having right now, when the market trades through these key levels, in this case is this level here, right? This 30-month range. It's not unusual the market get to that level first, for example. It didn't get to this one yet, because it's 25 here. 2550 is in the daily time frame. The daily time frame has a breakout. This is this low here. It doesn't. It has not has got back to this this level yet. But market has this tendency. It has this behavior, right? It tries one, it tries another one. It has penetration. There's some rally, and then tries again, some rally. The more it tries, the higher the odds that the market is going to trade through that reference. The more time it takes, the more time the market takes to take any reference, the less likely, the less odds it has to have extension in the direction of that reference. In this case, for example, if the market takes too much time in the weekly time frame, I'm talking about, for example, in this case, or in the daily, it takes too much time to take this reference, right? It can make multiple lows here, and the more time it takes, the lower the odds that it's going to have serious damage to the downside. But okay, what happens in one time frame happens in all time frames. The way how you approach one time frame is the same way how you approach the other time frames. I don't trade. I am not an investor. I don't have bigger capital. I don't even have this kind of capital. I trade intraday. Right? But I try to be aware what the market is doing overall, because I am not the only one who trades. That's a big mistake traders do. Traders think the market is after them. Have a tendency to think that everybody else thinks the way they think. There are many traders are unaware that we are just one part of the market, participants of a big unit, or a big market that has multiple time frames, multiple participants here. If I'm going to look or watch the overnight, notice that there is nothing here, right? This was liquidated this inventory. The market came or took this low in the overnight. All of these longs were forced to liquidate. Now the motions long high and started. Who was long here started short here below, without having an appreciation of what really the market is doing. So this creates a vacuum, but it's a overnight. There's no volume there. Okay, good amount of this inventory has been rebalanced now, but as I say, it puts the market in this situation that represents change. The market closed the gap, Potential destination is the opposite side of this range. Upside continuation, we see the market taking overnight POC, halfback, Friday's halfback, which is the same as the overnight halfback, POC here, and the basal spike. If the market doesn't take this spike here, it means this all the trade or all the action that happened after the market made this spike remains. As long this spike, as long value, I would have. I was tempted to remove this reference here, this spike base, but when I saw, for example, value, most of the values below the spike, this is acceptance of lower prices. Right now we have an action that is, you can you may have this reading the markets rejecting this lower prices, but look at that, it's building value actually inside, way far from this level. Right? It's accepting lower prices here. That's my reading. Okay, I haven't seen an opportunity yet. I'm quite sure the many traders out there will have made 10, 20 trades already. If you have any profits, okay, keep it. Don't have, many traders have this tendency also to think, now I'm going to play with the money of the house money. What the heck? No, Josh, keep it. Don't risk. Just because you have profits here, don't risk it. Traders always aim to home runs. They want to do $1,000, $2,000 in one day. That can happen, but doesn't happen all often. The amount of contracts we take is insignificant to make those kind of gains. 1, 2, 3 contracts. We might be risking a lot. Now the market has come outside this range. High remains, low remains. This period is very questionable. Let's take a look at volume. There's something else also you may have noticed that happens in this market is the action that happens in the period when inventory is getting too long, too short, or something is bound to happen. You will see. Check your clock. Always check your clock. Usually there is these things, especially when we have this kind of trading, very short time frame trading, we have these movements that happen, these corrections to the intraday, to the intra-period inventory that happens in the first minutes, in the first 5, 6, 7 minutes of the period, or it happens at or close to the closing of the period, like 5 minutes, the same thing, 4, 5, 6, 7 minutes before the closing of the period. Keep an eye on your watch as well. It's very important. It can help you. Try to have an idea of what the market is doing, or what is aiming, what it's trying to do. I'm trying to close the gap. I'm trying to get back to sell. I'm trying to get back to less. I'm trying to take the whole overnight inventory out. What it's trying to do. Now the market has come back outside this range. A strong market would not do this. For example, check maybe once and then boom, see you, sayonara. Right? A weak market will not close the gap. So there are signs here of weak trading all over the place. Now this low has been corrected. This weak high remains. If we have another period here we have another period, C for example, that widens this profile. It gives us 3 periods wide. We make a profile wider. Okay, the damage that market can do in either direction is, and this is always in terms of odds. Okay, this is not for certain, but this is just odds. The odds that the market is going to do damage in either direction. In this case, the market is trying to go higher, right? As a counteraction to overnight inventory. Keep that in mind. As a counteraction to overnight, because the trend is to the downside. Actually, traders will be selling rallies here. Professionals will be selling rallies here, and the damage is, it kind of like caps. It kind of like caps the movement, whatever the direction of the movement is, either to the upside or to the downside. When this gets wider, the wider it is, the more value is accumulated here, right? Each situation has a different readings. For instance, I have three wide, for example, right? And there's another one, okay, that's even harder. That's even harder. Good odds the market is going to become rotational, or good odds the market can keep doing what it's doing, right? As long as one time framing remains. Keep all those things in mind. I haven't seen anything here. I haven't seen anything here. For the type of trader I aim to be, or the type of trader I try to be, I haven't seen anything here. I can imagine Jim being long in this market at maybe when the market has this break in the overnight here, because of these highs that we have here because of this one having this break. I can imagine him going long here, being long here, with some puts, with some calls, and hedging right away here about selling some straight futures here. JJ has another type of trading. JJ would be buying here, for example, or selling from this level. Market cap here sells from this level. Selling from this level. Market take this level out, start to buy from here, and have this low as is stop. Different kind of traders. One is momentum trading. Both trade the structure. Both traders trade the structure of the market. Now, by now, many have forgotten this profile, A profile. Remember, we have two distributions here, kind of like two distributions here. Do you remember this 700? We talked about this 700. Now the market took this, market closed these distributions. This is intraday distribution, intra-period distributions here. Has got back inside this accumulation of volume, right? Getting inside here targets this opposite side, actually. It is one thing that the market has accumulation without this single really low volume level here, and another thing having this one here. I can see better here. Forget about the numbers here. We know that this doesn't have too much volume, right? Almost not 10,000 here. Even 3 here. Can you see 1, 2, 3? The volume is being accumulated in this area. This one tests this, tries this range. It doesn't have volume. Volume doesn't join here, because to take this volume out, we'll need some volume here. that may force these loans out and to liquidate. It just dry. So far, it's just drying here, and I suspect that the culprit is this high here, the non-excess high. You know this kind of highs tend to limit the damage can do on the lower side as well. Can you see when you take all these small pieces of information and put it together, it kind of like makes sense. Right? I am not trying to give any to make to give any meaning to the market, to the action the market is doing. I'm trying to understand what the market is doing. Right? I'm not looking at reason. I'm not trying to say, oh, okay, this is why this, why that. Not like that. I'm trying to get in sync with the market. Because if I understand what the market is doing, I can understand the risk as well, right? I understand my risk when this happens here and now. Where is buying? Where the market is buying? Or something. Is this market going to? I mean, today. Let's talk about today. Is this market going higher, or this market going lower? You can see it here. Low here, high, high. Market is going high. High here, low, low. Market is going lower. The market doesn't have a direction right now. The market is trading in a range. B is an inside bar. C so far is an inside bar. B is an inside bar towards the upside of the previous bar. C is forming the lower side of B. It's kind of like a balance being formed here. A rotation may be coming. I don't know. But I see some form of balance in this market. Once we have balance, the opportunity, there might be an opportunity there that can be forming, right? Either for rotation or for the market breaking out the balance. Most traders will see this as an opportunity in the upper side. They don't know what this level is, the 4350. They don't know what this level is, the 4351. It's pretty much the same, pretty much. They don't know that there is an important reference down here as well. They don't know that. They will see only this one, for example, right? And will be shorting, selling, buying, selling, buying, selling, buying, selling, buying. Following just price. When you put context, it helps. It helps. And there is just so much information in this market. It's just in the ES, the process, right? And for me, it's very hard to do more than once. I know traders that do the ES, Nasdaq, do Apple, the stocks, they do currencies, they do commodities. This is just too much. For me, it's too much. The bond market is making new lows. Boy, that market is terrible. This is so bad, man. Bond market make a new low and is at the lows here. The intraday, look at the intraday range breaking to the downside, still in range. Hasn't closed the fictitious. What is this level? 25. What do we have at 25? I see the level at which the market is now as a culmination of multiple time frames. Oh, check this out. this is the high of last year's. Huh. Wait a minute. This level here is very similar to this level we had here in the bond market. 22 low here, for example, right? This level here. This is 32 as well. That's another time frame. Not the monthly, but the yearly time frame as well. Things are getting interesting here. Alright, guys. I hope you have a good day or good rest of the day or whatever is left. Stay safe. We see you another day. Bye bye. I wish you the best. Bye bye.